The big story of the day, the Walmart-backed Flipkart is going to be partially spinning off PhonePe. In fact, we're being told that PhonePe is going to go in for a $700 million fundraise from the existing investors of Flipkart. So what exactly does this mean? Incidentally, PhonePe is also being valued at $5.5 billion. I'm going to be discussing that and more with the two guys behind PhonePe. Joining me are the two co-founders, Rahul Chari as well as Nigam. Thanks, guys, for joining us here on ET Now. Let me come to you first, Samir. How big is this announcement and what is a partial spin-off?
Hi, thanks, Nayantara. I think it's an exciting announcement, at least for all of us at PhonePe. It's both validation from the Flipkart board that they do believe in what we're doing, how it's playing out thus far, and they've given us the permission to actually do a partial spin-off and raise primary capital for the company. $700 million is a lot of money to sort of pursue our ambitions for the next 3 or 4 years. Hopefully take us to profitability, we do things right. I think, and the partial spin-off just means that Flipkart, which until now was 100% owner of PhonePe, the Flipkart board has allowed us to actually start getting direct capital, primary capital, and create our own ESOP program and basically float the PhonePe stock separately. That's what it means.
So Rahul, could another way of looking at this be that PhonePe is going to be more autonomous?
So Nayantara, PhonePe has always been very, very independent, and we have the Flipkart board to thank for the kind of independence they've given us from an operational perspective. But it definitely will mean that going forward, we can have much more long-term thinking with direct capital into PhonePe, 700 million at that. We can take a lot of long-term bets. The board also will be, the new board will be focused significantly on payments and financial services as an opportunity. So it's a lens that is slightly different than a lens which is about both commerce and financial services together. This is a pure play financial services and payments platform. So both those lenses, yes, it means further independence in thinking as well as further investment in a lot of long-term bets.
So even though there is a partial spin-off, Samir, what I find fascinating is you're talking about a new board, working independently, the freedom to raise independent capital. You're still going back to the Flipkart investors for this financing round of $700 million.
So I think the fact that the existing Flipkart investors, and they're some of the best in the world, by the way, I think the fact that they are really backing us right now is something that we're actually pretty proud of. And I think our attempts at trying to figure out what is the right price at which a PhonePe should be partially spun off, I think was not a very well-kept secret either. Media has been speculating for over a year as well. The reality was that given how fast we've been able to grow till date and how exciting the digital payment market is looking like in India and financial services market as well, I don't think there was any valuation at which the existing investors would not have backed us. They know more than anyone on the outside, and I think is the right answer because we are looking for long-term capital. Obviously, Walmart is a fantastic long-term investor. They're a generational investor, and the others on the board as well. Right now, I've been backing Flipkart for a long time. They've been there since we started. So I think it was easiest to find alignment within the group itself to start out with. And from here, now that we've managed to actually do all the structuring, we've created a separate incentive program for PhonePe employees, we've got the board. From here onwards, when we start looking at more capital should be needed, then I think the PhonePe board on merit along with the Flipkart board in consultation will decide whether we want to get others in or not. Dollar's green, okay. So that works. For us, it works.
Rahul Rahul Chari, if I can now come to you, you said that you will now have more freedom to also look at financial services, digital financial services outside of the e-commerce gambit. Now, we have seen PhonePe, of course, experiment with a whole host of new products, especially in the COVID-19 year. Can you give us a sneak peek of what's to come when you test this freedom, when you have more to do beyond the Flipkart group?
I think the last year, with all the pandemic and the chaos that it has caused, has actually been for us a very positive one when it comes to expansion of financial services. We've launched a whole bunch of insurance products with our partners, starting with sachet products, COVID-19 insurance itself, and very recently got into vehicle insurance, two-wheeler and four-wheeler. I think what you'd see in the coming year is a much broader flavor of the same thing. We will actually look at a lot more partnerships. We will look at products across the various pillars of insurance, whether it is life and health, whether it is term insurance, whether it is other sachet products. And we will also look at significantly more personalization. So the difference between a commerce play and a play like us is we are a significantly more broader play and not verticalized, and you will see us continue to expand in financial services across various verticals. I think that's definitely one of the areas that I'm very excited about. We all are.
So is that the immediate focus, Samir? You've obviously got your core business and then really focus on insurance. That's the main focus? Or are you also looking at other avenues and subsectors of financial services?
So I think mutual funds, again, we launched about 8 or 9 categories: equity funds, hybrid funds, balanced funds. So mutual funds and insurance, we did a lot of the sort of infrastructural work in terms of launching all the categories, getting the licenses in the last 24 months. I think in 2021, we will start really opening up our marketing efforts or educational category creation efforts in the wealth category. And that includes gold, by the way, which is again growing very fast. Gold, mutual funds, insurance. We are sitting out on lending right now. Still don't believe that we are ready for it, but we will start working on some scoring solutions. I think that's one very big area of investment for us over the next 3 to 4 years. And I think it's something that we are sure there's a lot of value creation in. The other one that's exploratory is sort of shaping the entire consumer merchant ecosystem with the kiranas. A lot of hyperlocal commerce stacks to be developed, store discovery, category discovery, CRM solutions, growth solutions for small merchants. And there again, I think with COVID or post-COVID, there's been so much turmoil in the MSME segment that I think that's the need of the hour. So we are going very, very deep into the rural sector on acquiring on the payment side. And on the back of that network, we're going to start trying to actually build solutions using the PhonePe for Business app and stores and switch sections on the consumer side.
Now, there's obviously been a massive surge in transactions for all kind of companies like yourselves. It started with demonetization, GST, and of course in the coronavirus year. We've also seen a stress on the infrastructure side, the network side, and today look at what has happened with an HDFC, for example, the kind of traffic you're seeing. Rahul Chari, you're also the CTO. Is the Indian banking infrastructure in place for the kind of surge that we've seen in volumes?
Look, I think we should be definitely conscious of the fact that the rate at which digitization of payments has happened in the country is unprecedented for the size of the population and the number of people who have come on board. And yes, like you mentioned, I think there have been multiple catalysts towards this. COVID has been the most recent catalyst. It has been at an immense pace. Therefore, the amount of investment, the entire ecosystem, not just the banks, right? It has to be, whether it's NPCI, whether it's players like us and the banks have had to make a massive amount of investment. So yes, there are areas where different players are playing catch up, and there's definitely a need to invest more, not just in scale. There's a need to invest in scale. There's a need to actually invest in customer support, areas like risk and fraud detection. A lot of this investment needs to happen. I believe it will happen. It is a matter of time. Some of these events that you're seeing are a coming of age of a sector that is rapidly growing. It's much faster than any of us ever anticipated. Sabir?
No, I think spot on. It's like the telecom industry in the 2G, 3G era, where when the market started opening up, everyone was talking about network quality, the need for more towers, the need for better and more spectrum. I think something similar is happening in payments, right? UPI wasn't on the map until about 4.5 years ago. Then you had Demon, which was one systemic shock. Then you had COVID, which is another systemic shock. And for this particular industry, at scale, it has doubled in the last 6 months. So whether one wanted to or not, the growth is so exponential that you don't have much reaction time, right? None of the players in the ecosystem have reaction time. You're just going to have to try and stay ahead of the curve. Even today, the two of us are unable to give a good predictable answer to our co-founder who manages our infra about what our peak will look like a year from now. If we're 5 years into this business, just the market continues to sort of grow faster than any of us expected.
And obviously, the current situation with COVID has also meant that supply chains across the world have been impacted. So even procurement of hardware, servers, and equipment to be able to actually beef up the infrastructure within our data centers, the data centers at the banks, having people visit the data centers while all of us are classified as essential services has been difficult. So as an industry, I still want to look at the bright side of how we have, all of us have actually stood up in these tough times to be able to actually make the demand and supply match happen to the best possible. And yes, we all have to make further investments and we have to make it at a very rapid pace.
But, just taking off from that, because it's the hot topic of the day as well, and, as a leading fintech player, Rahul, how real is the fear that if it can happen to an HDFC, the kind of warning that has come in from a Reserve Bank of India, which really just wants more preparedness for the digital ecosystem, that the traditional banks will be cautious about working with fintech players, will be more cautious about working with neobanks, or there is no such fear?
I don't believe there is any such fear. I think the fintech industry and the banking industry are an example today of some of the best possible partnerships, right? I think we are all in it to actually grow the market when it comes to payments, financial services, and financial inclusion. So I believe that this is actually one of the best examples of great partnership. I don't believe that this event really is a threat in any form to that partnership.
And I think in any industry, when you have signs of stress because of scale, I think that's a great time for any industry. I mean, as unfortunate as the recent incidents of outages, etc., are, we need to recognize that this actually means that consumers at scale are adopting digital payments, and that's not a bad thing. That's a fantastic thing for a market like ours. I think the only other concern I would have, and this is unrelated, but at some point will play out, is the financial health of the payments ecosystem. And we've talked about this with zero MDR. There's the notion of continuous investment in a billion-person market when there's no known revenue stream. That is a concern. I think we do worry as fintechs that banks may not find it viable to continue to invest deeply and stay ahead of the curve in a system that is not generating revenues.
That, of course, has been a long-standing demand and one we've been hearing about for some time. If I could get back for the event that I've got both of you today. Rahul, let me come to you now. $5.5 billion in valuation for PhonePe, a partial spin-off. You'll have more freedom to do things outside of the e-commerce platform. Usually you see a spin-off as a precursor to an IPO. Is that what this could also be about?
No, it's this event has nothing to do with any IPO plans. In fact, with the amount of direct infusion that is coming into PhonePe, we see this as being over and beyond how much we need anytime in the foreseeable future. For an IPO, there has to be other triggers and the right reasons. And as and when those reasons emerge, we may look at an IPO. But this really, for me, is confidence from the existing board in terms of our coming of age, our own independence towards charting a course that is of value add for everybody in the ecosystem of Flipkart, the existing investors, Walmart, and all the employees at PhonePe. We still believe that this is day zero, right? We do believe that over the next few years, digital payments is going to be like telecom, where everybody today has a phone and a mobile number. Very soon, everybody with a phone and a mobile number will be making payments only using the mobile. Post that, the market in terms of financial services, whether it is investment, whether it is lending, whether it is insurance, today is so small and the penetration so weak in India. I think that is a huge opportunity for a lot of us to actually just increase the pie. So I think it's day zero. But what we have ahead of us is this amazing platform that we have built, and super proud of the team at PhonePe and the capital to grow it even further.
Of course, the next UPI moment for this landscape is being talked about is the Open Credit Enablement Network. Samir, you have any plans for that whenever it does roll out? I did hear Rahul mention the word lending. Are we going to see anything on that front?
I think Rahul correctly mentioned that lending or insurance or mutual funds for that matter, by the way, we are playing the role of distribution and consumer research and partnering with players. I don't think we are naturally a lender, at least at this stage of the company. It's neither on the cards nor part of our ambition yet. But I think what we can do, we have a lot of data. We have some incredible data scientists in the company, and we fancy our chances of building really good risk and fraud systems. We have some of the best on the payment side. We are learning how to build risk models for the insurance industry with partners. I think at some point we will decide to actually get into the credit modeling side of things. Lending is a very different, like, again, there's layers to it. I don't want to put equity into lending. Not today anyway. We've not talked to the board about that either. But yeah, it's a massive opportunity in a market like India, which is really starved for loans. So whether we can play an enabling role, I think sooner than later, we will take a crack at that. Whether we act like a bureau and provide data on MSMEs or consumers to partners, NBFCs, banks, or whether we try and sort of co-underwrite, I don't know. We'll have to look at that. We've not really looked at it too seriously yet.
I think in the near future, we see ourselves as the most intelligent distribution platform for financial services, and therefore becoming the largest from that lens. Product creation of our own is something that we haven't really thought about right now.
Okay, that sums it up actually really, really well. I know PhonePe has also been called the jewel in Flipkart's crown. So Rahul, can I ask you that as the jewel in this crown, are you profitable yet? Is there a road to profitability which is far more visible now?
There is definitely a road to profitability. I think we've always had a focus on profitability, but not at the cost of growth. I think we do believe that we take a very studied or measured approach to our business and product. So there are product lines that we believe we have scaled to the point that we can focus on profitability. There are other product lines, like some of the things that we have mentioned right now in terms of financial services, that are still in the 0 to 1 phase, where we will be investing heavily in growth. So profitability is always something that we have our eyes on, but we look at it category by category and product by product. Samir?
No, I think Rahul hit it on the nail. I mean, we've just raised a bunch of capital to actually further ambitions and then try and do things at scale in other sectors beyond payments. At the same time, I think we've had a very continuous focus on keeping our costs low. A lot of automation. For a $5.5 billion company, we are still less than 2,500, 3,000 full-time employees. We keep our cost structure really, really low. And I think profitability will happen as natural outcome of that focus. It's something we aren't goal seeking with a date or gun to our head on, but it is definitely something that we will solve for in the next few years. It won't be a very long journey to profitability.
Okay, it's not going to be a long journey to profitability. That's the two co-founders of PhonePe only on ET now. It's their big day. You're seeing a partial spin-off from Flipkart, a $700 million fundraise from the existing Flipkart investors, and a massive valuation of $5.5 billion. Rahul and Sumit, thank you so much for being so candid during this interview. From the entire team here, we wish you all the very best.
Thank you.
Thank you. Thank you, Nayantara.